Albert. Hello everyone, good afternoon. James Preston with you live from 𝐊𝐚𝐥𝐤𝐢𝐧𝐞 Studios in Sydney, and this is the Buzzing Trend Show on 𝐊𝐚𝐥𝐤𝐴 TV. Let us cast an eye over how the market charter is panning out today amid a tug-of-war between encouraging economic data and inflation concerns and commodities volatility. Recovering from the early trade dip, the ASX 200 pared some of the initial losses. Australian stocks declined during early morning hours as sliding commodity prices weighed on resource-heavy sectors, with a weaker finish on Wall Street overnight, denting sentiments. Eventually, the upbeat economic data took charge of the market. And the market sentiments have now stabled somewhat. The US economic recovery is shifting up a gear with almost every piece of economic data released so far in June 2021. Payroll processing firm ADP's recently released private payroll count and weekly unemployment claims data have strengthened confidence in the labour market. Higher than expected market services PMI has also lifted faith in the manufacturing industry's rebound from the virus crisis. Having said that, a salvo of upbeat economic data has bolstered investors' expectations that the robust economic readings may rekindle taper talks from the US Federal Reserve. Investors seem to be closely eyeing fresh signals from the central bank to see whether the economic growth will translate into inflation and prompt withdrawal of monetary support. Investors are keeping a close watch on the upcoming May jobs report, which is expected to provide a firmer steer on the central bank's policy action and over the near term. Apparently, the Australian equity market continues to face a tussle between inflation concerns and economic optimism, experiencing widespread fluctuations between gains and losses in a single trading day. Moreover, there seems to be a tug-of-war between a materials sector dip and also gains in healthcare, utilities, energy and industrial sectors. At the same time, concerns loom that the emergence of a fresh coronavirus outbreak in China's Guangzhou can derail the ongoing global economic recovery from the COVID-19 pandemic. With Guangzhou being at the heart of the most populated metropolitan area in mainland China, blocking the spread of the virus is imperative to combat another fatal wave. And China may not be able to dodge a significant economic hit as it partly cancels flights, closes one of its busiest ports and locks down some of the communities in response to the new outbreak. All right, well, let's now take a look at the sectoral charter for the day. Shares of the Australian mining sub-index shed gains to post its biggest intraday loss since the 19th of May 2021. The copper prices have plunged as strong US jobs data fueled concerns that monetary policy could tighten, knocking growth-related assets. And also benchmark copper on the London Metal Exchange was down 3.1%. ASX listed heavyweight miners Rio Tinto, BHP Group and Fortescue Metals Group all edged lower today. And before we take a look at more trending updates, it's time for a small break. Please stick with us here on 𝐊𝐚𝐥𝐤𝐴 TV. We'll be back in just a moment.
The market takes the weekend off, but your money won't. Get a comprehensive update on the ASX listed stocks and market trends. Watch the experts touch upon the fundamental and technical developments and trending strategies in the equity space. We will be your daily guide as you explore the Australian share market, be it global vaccine developments or China's trade relations or global political turmoil or economic revival prospects. We will bring you live updates driving the equity market trends. 𝐊𝐚𝐥𝐤𝐴 TV.
Hello and welcome back. This is James Preston with you live from 𝐊𝐚𝐥𝐤𝐢𝐧𝐞 Studios in Sydney for 𝐊𝐚𝐥𝐤𝐢𝐴 TV, and you are watching the Buzzing Trends. Before the break, we were discussing trending updates from Australia's markets. Let's now take a look at the gold space. The gold index led losses on the benchmark after spot prices slumped 2%. The sub-index has lost 3.8% so far this week. Gold miners such as Northern Star and Newcrest Mining declined on the board. Also, Silver Lake Resources, Ramulus Resources and Perseus Mining also traded in the red zone. Gold slid as strong US employment data and service sector data propelled the dollar higher and boosted expectations that the strong economic data may well reignite taper talks from the US Fed. Then, tracking their peers on Wall Street, tech stocks also eased. The index giant Afterpay fell 2.5% during early trading hours. Let's now have a look at some of the updates from the energy space. The energy index capped the losses as oil prices steadied after weekly US crude stocks took a sharp fall. Natural gas major Woodside Petroleum and Oil Search gained on the board. And in the commodities market, oil prices have been on a steady incline since the beginning of 2021 on the back of the post-COVID recovery in global demand and supply cuts by key oil-producing countries. Oil prices recently hit two-year highs as OPEC and its members agreed to ease curbs on oil production in the wake of diminishing supply glut and improving demand. However, the recent drop in US crude inventories stabilised some gains in the oil market. OPEC's buoyant projection over a global consumption and rebound has meant that its decision to raise oil output in July has since appeared bullish for the pictures of the oil market. However, it is yet to be seen whether speedier demand recovery will occur and allow markets to absorb these additional barrels. Furthermore, it will be interesting to watch how OPEC will cope with a potential surge in Iranian oil output as the country aims to revive its 2015 nuclear deal with 6 world powers. Moving on to a rather major takeover, Prime West Group edged lower on the board amid accepting the takeover bid and merger proposal from Centuria Capital Group. Centuria bought out Prime West for $600 million, and under the merger terms, Prime West shareholders will receive consideration of $1.51 per Prime West security, comprising 20 cents in cash and 0.473 Centuria securities per Prime West security. Moving on to the next stock that is in the news today, and shares of MLG Oz slumped in prospects of tepid H1 revenue outlook. The supply chain solutions provider said a lack of processing materials will negatively impact the crushing and screening revenue in the first half of the financial year 2022. The company further added that its crushing and screening operations have experienced a reduction in available material to process from several clients across the last quarter of the 2021 financial year. The board expects the overall impact of this to be mitigated in the second half of financial year 2022. Well, that's all for now. We have so many more stock updates coming for you in our future show, so please stick with us here on 𝐊𝐚𝐥 TV. That was the Buzzing Trends Show. Hope you enjoyed it. I'll be back with you soon. This is James Preston for 𝐊𝐚𝐥 TV.